showcase 8 amazing startup teams that have emerged from the BFG Superstars incubation program called BFG Superstars. And some of the ideas include, for instance, Clamp, who is enabling passive investment in crypto indices, Realindex, enabling real estate trading based on derivatives, AMM, and oracles. Then we have, for instance, also Particula, who are doing the very first ESG token database. And we have also, for instance, MeCash, a cross-border payments infrastructure centered around stablecoins, especially for SMEs in emerging markets. And we have worked really, really hard during the last 3 months of our incubation program. And all the efforts of the amazing teams have culminated in 5-minute pitches. So you're going to see them today, and I'm very excited and proud to present you these startups. So let's start off with the agenda, and I will talk a bit more about what BFG is, what we're doing, who we are, and I will also get to present the judges panel, consisting of 5 amazing judges we have invited today. Then we will head right away to the startup pitches. Each pitch will go about 5 minutes, and afterwards, after every pitch, there will be 3 minutes of Q&A from the judges. Then we conclude today's demo day with announcing the top 2 teams based on aggregated scores from the judges. So, quick word about me. My name is Chung Chan. You can also call me JC. I'm based in South Korea, and I will be today's host. At BFG, I'm a venture manager, so I'm supporting the startups from start to finish during 3 months of startup incubation. And if you want to talk to me because you're an investor and you would like to get to know the startups, or if you are a startup founder or a potential startup founder, then you can also shoot me an email, or you can connect with me on LinkedIn. Also, make sure to follow BFG on LinkedIn, Twitter, and Medium. Maybe, Melissa, we can also share the slides later with the registrations. All right, so let me talk a bit about Blockchain Founders Group, what we are doing and who we are. The Blockchain Founders Group is a venture capital firm and company builder. And we are based in Germany and Liechtenstein. And we do mainly 2 things. We, on the one hand, invest in early stage Web3 based business models. And our sweet spot in terms of our ticket sizes is 200 to 300K, but up to 500K euros. On the other end, we are doing company building. And within the company building department, we have launched 1 year ago the BFG Superstars Incubation Program. And so far, we have founded 9 exceptional startups in the field of Web3, crypto, and blockchain. So if you look here at the selection of some of our investments, we have, for instance, Bentley. This is pretty famous. They did wallet services, and they are also building NFT marketplaces. We have, for instance, also Bloxus Capital, providing digital assets infrastructure. And we have also Kasuria from our S0 incubation cohort, who do DeFi analytics with a very strong team based in Munich. We also have, for instance, SignaX, that does metaverse asset creation and curation. And we have also, for instance, Ecolens. They have a talent pool of 3,000 self-educated talents, especially from emerging markets. And I want to also conclude here this short track record section with Eniverse. They did the first green metaverse event on Decentraland, and they do this so by bringing renewable energy certificates to the blockchain. And with this, they can completely offset any carbon emissions that are generated by metaverse events. So now we get to the BFG team, and the Blockchain Founders Group has been initiated by the executive team and the board of directors. Starting with Wolfgang Menne, he has over 30 years of experience in the venture capital and consulting industry, and he has great expertise in validating business models that integrate new technologies. We also got the regulatory and law aspects covered with Martina Dünser-Davis and Dr. Thomas Dünser. They are based in Liechtenstein, and Thomas Dünser, for instance, he was one of the founding fathers of the famous Liechtenstein Token Act, one of the key regulatory frameworks for enabling the token economy. We also have then Ulrich Spittler. He is a very successful serial entrepreneur who has founded and sold a big online pharmacy. And he combines deep technical expertise with entrepreneurial focus. Then last but not least, we also have Professor Philipp Sandner. In Germany, he's also famous as Crypto Pope. He has been termed Crypto Pope once in media. And really, he is everywhere. He is in newsletters, he is in podcasts, he's on television, he's even in my WhatsApp. So he really is everywhere for me. Then last but not least, I also want to give a big shout out to the BFG core team, especially to my friend Max Zhang. Fun fact, he's currently in Singapore scouting the VC and business angel landscape because we are thinking that Asia and especially Southeast Asia will be a major crypto hotspot in the coming years. So I'm wishing Max good luck, and probably he is listening in while traveling in a train. Then we got Albert as well. He's same as me, a program manager. Also big shout out to Melissa because she created all the slides. She connected with the judges. She really did a great job doing also marketing. Then we also have Elias, who is our research associate, a really well-versed content creator from our side. All right, then let's finish off the introduction by introducing the amazing panel of external judges. So let's kick this off with Axel. Great to have you here.
Hi guys, I hope you hear me well. Thanks for having me. My name is Axel. I'm the founder and general partner of Vanagon Ventures. We are Munich-based VC focusing on all things around blockchain with a special bias to climate and fintechs and decentralized web, trying to putting power back to the user. And happy to be here, ask some challenging questions and get to know all of you.
Great, thank you, Axel. Then let's continue with Danny from CBVC.
Hi guys, very pleased to meet all of you. So I actually look after Web3 investments with CBVC, so I co-head that team. CBVC is basically an ecosystem builder in the Web3 space. We're based in Switzerland, but we also have locations across Berlin, South Africa, and also setting up shop currently in Thailand as well. We've concluded over 50 investments in Web3 businesses. And we're often known as the hub when it comes to crypto or blockchain across Switzerland and the rest of Western Europe. So
awesome. Great to have you, Danny. Then next up, David from Picos Capital.
Thank you. Hi, everyone. It's great to be here. And thank you to the BFG team for the invite. My name is David. I'm based in London and I lead crypto Web3 investing at Picos Capital. Picos is a generalist VC fund based in Munich, but also got offices all around the world, including the States and Asia. We invest primarily across Web3 consumer and infrastructure, and we have about 10 investments now in the crypto Web3 space, and we just recently launched our dedicated crypto arm as well. So very excited to be here and hear all the pitches and ask some good questions.
Great to have you, David. Then Hugh, very happy to have you here.
Thank you. It's fantastic to be here. My name is Hugh McGurr. I come from Techstars. I've been here nearly 4 years now, worked on different programs, but as of this year, mostly on the Web3 program. We ran a successful accelerator finishing in June this year, and now we will be investing in 12 more startups for program start next April. So yeah, super excited to see the pitches today, and best of luck to everyone pitching.
Thanks a lot, Hugh. Excited to have you here. Then Pascal. I hope we can see each other soon and drink a beer here in South Korea.
Yeah, we're probably like quite close right now. Hello, everyone. I'm Pascal. I'm an entrepreneur, you could say. I founded ventures across Web3 and Web2. My most recent engagement with Wallet Engine, where I'm still the Chief Growth Officer. Wallet Engine is very much a wallet as a service business based out of Singapore, actually, but with a branch office in South Korea. And most recently, I've also joined Neon Foundation. And with Neon Foundation, we actually currently invest into any Web3 related, blockchain related companies that can empower our ecosystem. So if anybody of the startups is considering to build on Neon EVM, please check it out. We are an EVM scaling solution for Solana and currently looking to give out some grants for some cool projects. So super happy to be here. And let's get this started.
Brilliant. Thank you to all the judges. We will need your input later for the Q&A sections. But now I would like to hand over to Melissa, who will start introducing the startups.
Thanks, John. So all 8 startups pitching today have spent the past 4 months as part of the BFG Superstars program, developing and building their ideas. So in this pitching order, we'll first have Team MeCash. They are a small startup enabling small businesses and SMEs in Africa to send and receive cross-border payments using blockchain technology. And next, we have Team Clamp. Their project allows users with zero or low crypto knowledge to invest in digital asset indexes and build a diversified portfolio in crypto. Third, we'll have Team Oasiis, whose project aims to create an identity solution that aggregates digital identity while preserving privacy and giving control to users. Next, in fourth, we will have Team Particula, a platform for tokenized sustainable assets and ecosystem-based tokens. So they will offer a trusted one-stop solution for investors and companies to ultimately try and prevent greenwashing. In fifth place, we have Team Realindex, a platform allowing the trading of real estate on the blockchain by bridging off-chain real estate data with the blockchain. And sixth to pitch is Team digitalsocial.id, who aims to bring real-world identity reputation on-chain through soul-bound tokens while maintaining full privacy. And we have Third Labs after that, a network enabling Web3 projects, VCs, angels to scope out each other to instantly top funding, business, and partnerships. And finally, our 8th team to pitch will be Chenkster, who aims to solve the inefficiencies of researching travel information by sourcing experiences through local experts. So each of these teams will be given 5 minutes to pitch, and they will immediately face 3 minutes of Q&A with our panel of judges. And at the end of the pitch event, we will announce the top 2 startups for our demo day based on the judges' scoring using our rubric. As for the judging requirement, each startup will be evaluated on each of these criteria. First will be the project's market potential. The startup will be judged on whether they are solving an actual problem faced by many and whether their solution is effective. Next, we have got technical feasibility. So the startup will be judged on how well it has integrated blockchain technology into its project. And third, and I think quite fundamental to early stage startups, it would be the business model. So the startup will be judged on how scalable their business model is on a regional or even a global level. And lastly, the strength of the founding team. The judges will be evaluating the team. Are they well equipped? Are they experts, or do they have backgrounds in the industry that they are coming from? And are they confident in delivering the project? And so without further ado, let's kickstart the pitching. And can I invite Team MeCash to start sharing their screen? Thank you.
Good afternoon, everyone. Welcome to MeCash. My name is Mudugbe Dialu, and I'm one of the co-founders of MeCash. So what is MeCash? We're building the PayPal for Africa, and MeCash is about enabling small businesses to send and receive cross-border payments for goods and services using blockchain technology. So our use case is really stable coins. The reason why stable coins are important is because they're pegged against the USD, so fluctuation is managed against the 41 currencies on the continent, on the African continent. And secondly, because for the first time in living history, you can move money from Nigeria, from Togo, from any part of the African region to other parts of the world by just on a crypto exchange or using a digital currency. The vision is really clear. MeCash is about building a PayPal for Africa, and it's enabling the small businesses to send and receive cross-border payments within the continent. So it's about stitching together the 55 countries, the 41 currencies, and also enabling those small businesses within that continent to trade with the rest of the world, whether it's China, India, Europe, or the Americas. How big is this problem and what is the scale? There are 44 million underserved SMEs at the moment on the continent. So I'm talking about SMEs or sole traders, such as you will find on eBay sites, such as you will find on Amazon site. They're currently underserved by the normal banking system for many reasons. Also, the intra-Africa payments, 40% of intra-Africa payments is cleared in North America. When I say North America, I mean the SWIFT system. It's expensive, it's ineffective, and it takes time. And also, if you look at the data around commercial transactions, it costs the continent about 3.4 billion every year in terms of the cost of moving money within the continent itself. It makes it very slow, very expensive, and an ineffective way of moving money within the continent and from the continent elsewhere. How big is the opportunity? The opportunity is divided into two. The first one is the African Continent Trade Agreement that was signed recently this year. For the very first time, the 55 countries will be able to trade with less trading barriers. And we expect this, and it's expected that there'll be about 70 billion a year of intra-Africa trade volume. For us, this is the right time to build. The opportunity is also the second reason why this opportunity is the other second point around the opportunity is the Africa and China trade. China estimates that on every year, China does about 1.2 trillion of trade. If you take out crude oil, commodities, and precious stones and the big items, majority of that volume is e-commerce. You can further reduce that e-commerce into two sites, Alibaba and AliExpress. Well, the only people that go to Alibaba and AliExpress to buy goods are sole traders and small SMEs. Corporate clients would not go onto Alibaba and AliExpress to make transactions. Anything over 100,000, they go straight through to the manufacturers. For us, those are the two areas where we see the opportunity. China is Africa's biggest trading partner, followed by India, which also does about 70 billion a year. But even if you limit that to just China and the intra-Africa trade volume, we're talking about just under 2 trillion of trade opportunity that we can leverage on. So what is the MeCash solution? So what is the MeCash solution? And how does the MeCash solution compare to the existing process? Today, if a trader wants to send money from, say, Nigeria to Ghana, they will go through a third-party agent. They will go through an intermediary agent. One of the problems with that is you're relying on the liquidity of that agent. So if they can collect money from you in one country, if they don't have liquidity in the other market, then they have to wait until there's liquidity. It makes it not regulatory compliant. It makes it slow, and it makes it expensive. In some cases, the transaction fee is up to 24%. And the supplier will be unwilling to ship the goods until they've received payments. The difference is if they come onto MeCash, it's a self-serve service, it is fast, it is cheap, and it's convenient. The customer comes onto the app or to the website, we extract money from their either from their accounts, their wallets, their mobile money, or their bank accounts. We convert that to stable coins via API integrations with crypto exchanges, and then we convert the stable coins. We off-ramp that stable coins to fiat in the receiving markets. This is very regulatory compliant, it is fast, there's low fees, and it's a secured way and a self-serve way of completing trade transactions. This is what the product features will look like by Q1. The customer will have access to an exchange calculator, they would have access to reporting, they would have access to a multi-currency wallet. The reason why multi-currency wallet is important is, it allows them to manage the operations, it allows them to deal with constant fluctuation of currencies within the continent, and where some of these traders trade across multiple countries, it allows them to manage their finances. And it also allows them to pay suppliers and request payments and cross-border from buyers. We have traction. So we've been working on a pilot. We have a couple of routes that are currently open: Nigeria, Ghana, UK, and the US. You can send money in both directions. 18 customers so far have trusted us with their money, and we've been able to move approximately $70,000 from one country to the other, which is fast, convenient, and easy for these traders. Also, we have a waiting list of over 1,000 SMEs and sole traders waiting for us to go live, to onboard with us. We expect to grow that waiting list to about 3,000 by the end of Q1, at the point where we start onboarding customers onto our platform. What is the revenue model? So we're currently working on the year one model, which is FX spread and transaction fee. So we're taking between 10 to 15%.
Hi, Modu. I'm going to have to stop you there because we are at the 5-minute and 30-second mark. Is there anything else you'd like to wrap up?
Just why the team. So I'm ex-PayPal, 4 years in PayPal, 16 odd years within financial services, facing up to emerging market. My expertise is licensing, operationalizing in new markets, and market operating model. My CTO is ex-American Express. She's a front-end engineer, and she's putting together the technical team for the execution of MeCash.
All right, thank you so much.
I welcome any questions.
Yeah.
Thank you, Monu.
Go ahead.
You sure, Pascal? Thank you. Can you said you've got 18 customers or users on board. Can you tell us a bit about, how you acquired them and maybe this waiting list, but also, beyond this waiting list, how you intend to acquire customers going into the future?
Okay, so I'll start with the waiting list. So our anchor market is Nigeria. So pretty much we're focusing on verticals that are not supported by the existing FX policy. So if you're not buying wheat, you're not buying building materials, you can't access the FX if you go into your bank. So what's happened? So what we've done is we focus on those verticals. So fashion, automobiles, or people buying motorcycles, and we've gone straight into those markets, and we're speaking to them about the products, about the services we're offering, and that's how we're signing people onto the waiting list. So we're physically in the market every day in the Lagos region for now. So that's how we're building out the waiting list. We expect to convert about 20% of those once the platform is live onto real customers and start transacting with them. In terms of the existing traction we have and what we're doing around that, so so there's a small white list, so people that we know that are trading, for example. So we're speaking to them. We have a relationship with them, and they can come onto a section in our website, which those people only have limited access to. It's a semi-automated process, and we're doing a P2P model. So, for example, somebody wants to pay for second-hand electronics in the UK. We would do that. We would do that by matching somebody else. Or we will buy the stable coins via the P2P system in Nigeria, convert the local currency, fiat, to stable coins, send it to a wallet here, and then off-ramp into GBP, for example. So that's how we've managed to increase traction with those small number of customers.
Thank you.
What is the process for onboarding customers to the platform, or clients that are users of the platform? Basically, how do you onboard end users to the platform? Is that an easy process? Is there a level of KYC required there? Could you perhaps give some more insights into that?
Yes. Okay. So one of our ambitions is to try to get some money remittance licenses. The reason why is ultimately you're accepting money, you're taking instruction to send money from one part of the world to the other. So what we're building is an onboarding system that reflects the KYC requirements of an international money remittance license in Nigeria, for example. So Nigeria, as an example of onboarding, there's certain things you need to have in place to verify. So you need to verify their bank ID, which is called BVN. You need to make sure they provide proof of address. And for each transaction, you need to make sure you obtain a receipt or you obtain an invoice to be able to take the instruction. So we are building, whilst we're 3.0, we are building onboarding and KYC that supports international money remittance in different markets. So Nigeria is an example.
Thank you so much. All right, David, one quick one.
Yeah, just a question on the scalability. So you mentioned there's about 40 plus currencies. And I think, or understand a bottleneck, and I could see a bottleneck there forming in terms of liquidity for each of those currencies, and maybe some exchanges may not have that. So how do you plan on overcoming that while still having that, seamless API integration without kind of going off chain, I suppose?
Yeah, no, that's a very good question. So a good example is we're working with a partner that has connectivity within 9 countries using one currency, so CFA. So one of the things that partner, we will consider that partner a settlement partner. So in which case they will pay out on our behalf and then we'll settle them a couple of days later whilst we do all the back end and buying the stable coins and off-ramping of the stable coins onto that customer. Or some settlement partners that we've also identified in East Africa, for example, are happy to accept stable coins. So they will use their own fiat liquidity to pay out in exchange of us providing them stable coins as the intermediary currency. So there are a few use cases depending on the settlement partner you have, but we do not imagine, whilst there are 41 currencies and 55 countries, we do not imagine being in each of those countries and having cash in those countries. I think that would just be too much, but there are settlement partners that will be able to support us on that journey.
Amazing. Thanks so much, Modupe, and thank you, judges. So while you fill in the scores for Modupe, we will have Abhishek from Clamp on. We'll get ready to pitch next. When you're ready.
Good day, everyone. I'm Abhishek. I'm the founder of Clamp, and we enable anyone with low crypto knowledge to invest in digital asset indexes and build a diversified portfolio. Between January and June, I spent my time talking to people trying to understand what are the problems with crypto, especially in India, because our adoption has been abysmally low back home in India. I realized that crypto investing for a beginner was absolutely broken. Active investment in crypto was time consuming, it had trial and error. As a result, 90% of those interested never actually invested in crypto, and this was becoming a problem. There is a set user behavior in India which prefers passive investment because it is easy, saves time and money for the investors. Talking about equity markets alone, 140 million Indians invest actively each month, but 420 million Indians do it passively through a ETF or another product. In India, you have a lot of crypto exchanges solving for the active investment market, but who is solving for passive investment in crypto to ensure that people who can't actually understand crypto, but they want to start into crypto, who is building for them? That's where Clam comes into the picture. Only 2% Indians have invested in crypto so far, and we believe we are going to change that. Together with other emerging markets, this is a once in a lifetime opportunity to onboard the next billion users to crypto and DeFi. We built Clamp. At Clamp, we offer digital asset indexes, which give a user the option to start with as low as $10. So we enable fractional ownership in crypto as well. We are trying to bring down every barrier that exists for someone who is just starting out in crypto. Users can pick a preset or do it yourself and build a diversified portfolio. Our aim was to ensure that our users can build a diversified portfolio. Our users hold the token. We do not hold it for them. We are a self-custody platform. We do not charge a management or exit fees to our users. With a seamless on and off ramp experience that we shall provide going into the future, it will enable users to set up recurring purchases that shall be deducted directly from the bank account. And the best part about all of this, you can get started in less than 30 seconds. We are not just talking about building something that can actually get you started in less than 30 seconds. We've already built it out. Just feel free to chat to me and I will give the entire demo. You have a lot of crypto exchanges that are trying to solve this problem with recurring purchases. So what happens is, on the front end, they tell the user they are setting up recurring purchases while they hold custody of the tokens. Poster child of every custodial platform and centralized exchange, FTX, has shown why self-custody is important in crypto going forward. And somewhere we have deviated away from the core fundamentals and ethos of decentralization and cryptocurrencies. At Clamp, we enable digital asset indexes But we do it in a little different way from what it is done currently by a lot of index fund tokens. Right now, index fund tokens create a new index token, a new ERC20. They wrap it up, they mint this, and then they give it to the user. The problem with this approach is it costs high gas fees on the business side, as well as along the option of the problem of providing enough liquidity in the market. While on the legal front, this opens up a new challenge where your entire new ERC20, the index token, could be classified as a security. So at Clamp, we make things absolutely simple. If a user invests in a digital asset index, the user actually owns the composite tokens directly. So this solves both the problem of bringing down gas fees to ensure that the transaction goes through because it's a multi-batch transaction, while also ensuring that there are no regulatory frameworks where we fall under. We have we have a lot of traction. Paul Graham says that great YC startups grow between 5 to 7% a week. The best ones grow at 10%. So far, the focus we had on building a community while we were building the product on the back end was that we were very focused. On an average, we are growing 18% per week on LinkedIn. We have more than 100 users on the early access list. We have 3,000 plus LinkedIn followers, and we received 2,500 plus applicants for an internship alone. Just to give you an example, I made this pitch deck yesterday night when we were at 3,000 followers. Right now, we've already crossed 3,500. That's the sort of traction and growth we are seeing at Clamp. On the team, it's me, Abhishek Yadav. I'm the founder and CEO of Clamp. Back then, in the early days, I was a Q fellow at Concourse Q. For those who might not know, Concourse Q was the Concourse Open community, which was doing due diligence on ICO projects. It later became DAPT, and from DAPT, it became the DeFi Pulse Index. That's where my knowledge about digital asset indexes comes from. So Clamp is not just 4 months of my hard work, it's 4 years of my life and hard work. We have a very simple roadmap, a very ambitious target. So thank you. That's it from my end for today. Please reach out to me, and I hope you will join us in our mission to bring the next billion users to crypto and DeFi.
Thanks so much for that, Abhishek. I will bring on the judges for the Q&A segment.
Yeah, Abhishek, I would have a question. Pascal here. Can you hear me?
Yes, I can hear you, Pascal.
Awesome. So in one of your graphs, you were basically comparing yourself with FTX, with some competitors, and you were putting yourself into this bracket of non-custodial. So I assume you mean self-custody, right? So yes. My question would be, if you bring users into self-custody that have no experience on how that actually works and what it is, like how do you actually educate them on maintaining their wallet and stuff like this? Because if I'm like not really well rounded in that field, I have my seed phrase, I maybe take a screenshot of it or whatever, right? But if someone steals it or gets access to it, the funds are gone, right? So how do you manage that?
Yes, so we've had a lot of work that is being done in the open source community and by the Ethereum core developers as well, with account abstraction, and especially with, you can have smart contracts that actually function as a wallet. We will be also taking we will build a product on top of the open source work that has been done, and it is our aim that we want to make it as simple as possible. We want to have a seedless self-custody. So if you saw in my roadmap, we have it especially around August that we want to build a seedless self-custody for users who even find onboarding or making a wallet difficult. We will solve it for them as well. Right now we can do it with Web3 Auth and other such providers, but going forward we want to ensure that we give the simplest and the most straightforward solution possible.
Hi, Axel here. I have one question for any kind of downside protection for the user. So you say as well, as Pascal asked, the people are not very into the whole thing. So they could basically make very wrong decisions. Do you have any kind of protection for them? First question. And what about smart contract risk on all of those? Do you plan to have insurances as well?
Okay, 2 questions. I'll answer both of them. So the first one, are we, giving investment advice to the users? We are not giving investment advice because we don't want to get into that sandbox of investment advice. The whole point of a digital asset index is to ensure that there is diversification in a portfolio. it's much better than having all your tokens and portfolio concentrated at one place versus having it diversified. So that's one part. The second part about the smart contract risk. So as I mentioned, we don't create a new index token, or we don't actually have it. We don't have a bridge, or we don't have a smart contract which is actually holding the tokens. What we do is we directly give the user the composite token and it sits on their wallet. So there are actually no risk wherein the smart contract is holding anything, because this is something I have learned in my career in crypto and decentralization, that smart contracts ideally should not be holding a lot of user funds, or they should not be holding, they should sit directly with the user. So that's the approach we've taken.
Abhishek, if I can ask a follow-up on that, can you just go into a bit more detail on how the composite token, or the composite basically, is held by the user? So you tout the cheapness of it, so you are presumably on a layer 2, but then how do if I have, I don't know, a basket of 30% Bitcoin, 30% Polygon and Ethereum, how do you give that all to me? Because you said batch transactions, which means that I have to wait on the bus with others until my transaction gets executed, I presume, in order to be cheap. But then how can I exit? Because then I have to wait again with everyone else. So I presume there's a time component to this, right?
Great, David. So what we did in the initial phase was that we went for tokens which had liquidity in the market for the initial phase, so that when we multi-batch transactions, it does not create a problem where the user has to wait a lot of time for the transaction to be completed. I'll be more than happy to show you the demo. We've actually built it out. It takes 22 seconds to be absolutely precise to complete one entire purchase of a digital asset index. More than happy to show you the entire demo after this.
Cool, thank you.
All right, that's all the time we have for questions. Thank you so much. And we will now invite team Oasiis to come on.
Thank you very much. My name is Vincent, and together with my co-founder, Elliot, we will spend the next 5 minutes telling you about the future of the Web3 cookie. And specifically, Oasiis is the first user-centric wallet cookie that creates actionable insights for commerce. Wallets actually tell an extremely personal story about who we are. You can imagine that you may have, for instance, interacted with a smart contract belonging to a KYC-only Indian exchange. You're actually telling the world in a transparent manner you may be an Indian national. You may have been whitelisted for an artifact drop. You are transparently showing that you have a certain net worth because of the value of that NFT. Also, you're giving behavioral insights on taste in art, taste in fashion, brand preferences. Obviously, this is a goldmine for companies and platforms. However, there's a really serious issue if they want to start using this kind of data. We have developed a system and a culture where we do not allow apps, users, or regulators to just let us use that data without basic protections. We know that major browsers are banning third-party cookies exactly for these reasons. Users have collectively and overwhelmingly said they do not trust and do not buy from platforms if they don't know how their personal private data is being processed and used. And in Europe, we have GDPR with huge fines if personal data is not processed in the proper manner. So where do we see this market going? If we can solve how to sustainably use our wallet insights in an interesting commercial manner, it's a huge multi-billion-dollar opportunity. JP Morgan has predicted that the digital fashion collectible industry, so NFT fashion, will be a $50 billion market by the end of the decade alone. And this leaves out huge verticals such as art, gaming, music, etc. Typical e-commerce platforms spend 5 to 10% of revenue on marketing and acquisition. So you can imagine, you can do the math. It's a multi-billion-dollar opportunity. However, at this point, platforms are not willing to take the risk. So let's look at what that would look at like now. So you may, go to an NFT platform and you connect a wallet. That company would then have to go and read your wallet data, process it. There may be personally identifiable information in there, and use that to create, sort of the Web2 targeting that we're used to, showing different products. There's personal data processing risks, and it's also very limiting if we now switch to a more ideal solution where we have the basic protections we have come to expect, we're introducing it with Oasiis. The user still connects a wallet like we're used to, but when that connection happens, the user could get a browser extension notification showing that their data has been queried and how it's being used by this platform. The platform doesn't query the wallet directly. It uses our querying service, and we do the processing for them in a compliant manner, allowing the user to also opt out. Importantly, we also can use this querying service to aggregate multiple wallets, creating also a richer, more compelling service for companies to use personalized targeting.
Now, what do these actionable insights actually look like for merchants? So what we're building for merchants is an app which directly looks at boosting revenue based on these insights. So you can see without Oasiis, you would have no insights based on users whenever they're accessing your platform and connecting their wallet. So you can see there's an example of DressX, a merchant shop, and you can see a number of products which aren't actually have any relation to the customer's bank account, for example, or their wallet address. You can see there that they actually, if they're using Oasiis, they have specific insights based on their wallet around their purchasing power, which means you can put specific prices, around product positioning. Now, this is really, really powerful because it means the exact products that the customer is looking for. You also have compliance benefits because of the fact that you now are making sure that you're not using personal information. Now, what we're doing from a user perspective is allowing this optional browser plugin. Now, what this means is that the user can download this plugin and they can then easily have it on their browser, meaning that they can view all the transactions that the merchant is able to look at. They can understand and get notifications based on this, and equally they can set their preferences, meaning that they can choose whether or not this data is actually being shared with the merchant, meaning that they're getting control. Now, very importantly, in terms of our go-to-market, we needed to make sure that we are targeted and had a clear scope and ROI. So we're going to first be looking at Shopify merchants, and there is reason for this: huge market, 1.7 million merchants, big investments into Web3, and already the biggest brands are using the platform. Also, we're having a really clear-cut ROI to start with. We're focusing on user price optimization, as it's a simple MVP build, a clear insight, and means that we can develop more insights on this as we go on. In terms of our business model, it's a very clear and simple, scalable SaaS product with a free trial period, and equally a quick installation, meaning that users can easily access it straight away. In terms of our traction, we are clearly having this land with merchants. We have Studio Comet, which we're working with, who is a Shopify partner. They have a number of connections to the Shopify network, and we've been speaking with them around their customers who have been trialing Oasiis and speaking about whether they'll use it, and they're very excited. And in fact, we have 7 merchants ready as design clients who want to use the product, including one NFT marketplace, which has a 4 million seed round. In terms of our team, we have over 30 years of experience across software and emerging technologies, 20 years working in startups, and over 8 years across the Web3 and blockchain space. We're ex-Accenture, Capgemini, Invent, Antler, and equally have 2 amazing advisors from IHK Head of Cryptography, Vaneshri, and equally Michael from Concordium Blockchain. Thank you very much. Excited to hear your questions.
Thank you. So now we'll move on to the Q&A.
I have one question. You said the merchant has to use the app, right? So what in his behavior has to change that the adoption on the merchant side will work?
What do you mean by behavior?
What is different for him?
So from a merchant standpoint, now they're actually able to be using Oasiis and the data that we can aggregate on users, understand more about their user, and therefore have more tailored experience offered to the customer. It's
a very familiar experience for a merchant to use a Shopify plugin, right? They go on the Shopify store, they see increase your ROI by using, data from Web3. 10-day free trial, risk-free, 30-second install. They see an increase in revenue, they pay.
And right now there's a massive gap they have no way of actually leveraging the insights that they're getting from these wallet addresses. And it isn't ever then tailoring that for all the customers that are accessing their platforms.
Okay.
Guys, what do you see as the main data point again that gives you confidence that this is the right time for it? Because long term, definitely see that kind of wallet is my backpack and digital identity. But looking at it right now, relatively, the amount of data there that you can use meaningfully as a merchant is rather limited. So what kind of have you seen that gives you comfort that, okay, timing is right for a solution like this?
Yeah, good question. I think that's one of the biggest reasons we wanted to go with Shopify, is because they already have a number of players that are already using Web3 heavily. So they are native platforms, for example, NFT marketplaces that already are needing to get more insight on users that are very in the Web3 space. I think that's one reason we wanted to be very specific around there. I think also broadly, the trend that we're seeing is very much in relation to the privacy standpoint. So we are going to be the platform which actually is kind of preempting this change that we're seeing within the Web2 space about the fact that you are having to care more about privacy from a company standpoint, and actually allowing them to do this straight away by giving control back to the user from the get-go.
We actually have one of our design clients that built their own tooling because it wasn't available on the market. So that does show there is an increasing demand. If they can have the 30-second installed native to Shopify, and they can use, for instance, a customer's net worth on their wallet, knowing they have 3 ETH, and being able to tailor products that match that number, there is a business case for that.
Hey guys, just following up on Axel's question, could you maybe just verbally walk through what is the change in behavior for the actual end consumer here? Where did they get the kind of opt-in ability to, say, participate in what you're offering?
From a merchant standpoint, or more from the user standpoint?
User.
So user, but I
via
the merchant.
So if the merchant, for example, we're using DressX as this example, if they, as a user, you would go onto the website and you would connect your wallet, you would get the same push notification that you would typically get from a cookie service. And when you get that, you would have to accept terms, and you would also get a link to download the Oasiis browser plugin. Once you downloaded that plugin, it's just an extension in your browser. And at that point, what happens is every time they're using your data, you're able to transparently see that. So it gives, complete transparency to how user data is being used. But what it also does is it allows you to be able to control that data. So you can go in, change your preferences, and choose what data organizations actually see about you. And that's incredibly powerful. No one is doing that at the moment. And as on-chain data becomes more and more transparent, it's really important we find ways that actually give users back control of their personal information.
No one can see they're reading your wallet. And importantly, this is not mandatory, right? It's optional. A lot of users will not download this plugin, but companies can rest assured they have this option, showing transparency, giving users control when they're using their data for personalized targeting.
Okay, cool. And what do you think is, so you kind of, in your example, you gave, let's say, the quantitative financial amount in a wallet. What do you think would be the next most sought after piece of data?
So I think one of the biggest things is about almost customer preferences. So your ability to be able to understand certain interests that they have, certain things that they bought in the past, and actually tailor not just on the price, but on their actual interests. So I think that's definitely one trend. Also, you can just understand and build up based on different activities that they've done, what other kind of brand partnerships you could go with as well. So it's also thinking less from a direct sell to the end consumer, but more just as a business, what are different opportunities I could be looking at as product tailoring or brand opportunities you could do for collaborations and stuff like that as well.
Yes, we're ready. Okay, you should see the screen, and I hope you hear me well. Warm regards from Dubai. My name is Simon, and together with Mohak and Pierre, I'm working on digital social ID. Now, the internet changed the world, and now the internet is changing itself. We need to make sure that the internet is a safe place, in my opinion, with real humans you can trust. And we are certain that 2 years from now, most of us will already own some sort of internet reputation, and digital social ID is the company that helps us to get there. Now, the internet was made for machines to communicate with each other, not for human beings. And now businesses are struggling to find trustworthy users more than ever. And then risk mitigation eventually leads to an impingement of user value, which is kind of a dilemma. So wallets are not identifiable at this stage, and it's impossible to measure a wallet's level of trustworthiness, at least in one single snapshot. So this leads to problems such as waves of bots invading the apps. Now, from a user perspective, take this guy. He tried to prove his that he's a credible human to a DeFi platform when taking out a loan. In DeFi, he's just a wallet, so he can't show his good intentions to the protocol. Hence, he has to bear the burden of over-collateralizing his loan. And we thought there must be a better way for things like this. So we say having a social identity that is immutable and fair is your personal proof of credibility. We need identity reputation infrastructure. And that's where digital social ID comes in, because we have a solution for this. DeFi helps you build your on-chain reputation with full anonymity. So our friend can now interact in a diverse set of internet actions to build his social reputation. And the best, as a user, you own that reputation. Let's say you are a wonderful guest to your host on an accommodation platform, for example, in Web2, and he gives you a great rating. Who owns that rating right now at this stage? You or the marketplace provider? If we think about it, it wouldn't be much more fair if you actually own the reputation and not the middleman. And blockchain technology is now here to help. From a timing perspective, it is a great time to build right now and get the market ready for wider adoption. So we think we'll be ready when the market is ready, for sure. And in a conservative model, DSID is looking at a serviceable, obtainable market of $20 million. But we're only considering here capturing ETH wallets. But as a multi-chain project, we can scale into a much, much bigger market in the long run. Right? Now, let's take a deeper look at how it actually works. So please pay close attention. First, an internet user initiates some activity on a third-party platform. In our example case, this could be making a donation. Secondly, the user will be asked to connect his wallet before actually making the donation. He then finalizes the activity, respectively makes the donation, and the platform will provide feedback to DSID immediately. And number 4, the user is able to mint a social accreditation token. Technically, that's an NFT that represents his action in the internet, and this NFT is strictly non-transferable, so it's bound to his wallet. Those tokens now make up the user's reputation inventory that DSID utilizes to compute a score from A to F. Then, second part, the DSID hub. That's the central piece for users, and important features here include to actually see your online reputation in an instance after connecting your wallet and bake your reputation. That means aggregating all social accreditation tokens you have. You can also access the SAT inventory to see all collected SATs from different interactions with different service providers of our ecosystem. Or you can simply compare yourself on the DSID leaderboard. Now, most importantly, you will find partner businesses in the DSID hub where you can either earn reputation or use your reputation. Happening right now is our MVP. So we have 2 use cases rolling out until January. One of them is credit reputation with Compound. So as someone using Compound's lending services, you can visit the DSID hub, connect your wallet, sign a smart contract, and with Compound and based on lending activities, we can allow you to mint a social accreditation token. With this token, you can show your reputation score to DEXs like ZeroVix, for example, where you can get low interest rates or less collateralized loans if they're part of our ecosystem, obviously. Now, let's also talk about money at the end. If less than 7% of all active wallets on Ethereum would actively use DSID, we would already be at $1 million in revenue per year based on our model. We have 3 revenue streams. One of them is minting reputations. As a user, we receive 25 cents per transaction. And the biggest part is verifying users from business side. And they utilize our reputation history and they pay €0.50. And also the user bakes his reputation by aggregating all his social accreditation tokens in the DSID hub. This is €1 per reputation baking. You need to do this only occasionally. And that's basically where the money comes from. Now we touched on the product, we touched on the revenue stream. Let's see who's making it happen. Mohawk is a full stack blockchain dev. He has more than 5 years experience as a software engineer, and he has several hackathon wins under his belt, one of them including a credit scoring scheme based on soulbound tokens. Pierre is a seasoned marketing expert. He already sold digital products worth far more than €1 million. And then I am an experienced salesperson, and I worked the past 2 years actually in a venture capital fund. Now, me and Pierre are officially full-time working on DSID, starting in January. Actually, we started already a couple months ago, to be honest. With all that being said, we want to remind you that your identity is who you are. So let's make the best out of it. And I'm very happy to answer any questions that come up, because I'm sure there will be some. Thanks so much. Sure.
All right, we'll now bring on the judges for Q&A.
Yes, please bring them on. I'll stop sharing for now, but maybe I need some of the backup stats later. I can share again.
Thanks, Simon. Forgive me, but I didn't quite get the acquisition slide via charity. Would you be able to, even this example, or use any other particular examples for how you intend to acquire users here?
Sure. So basically, all you do, this is just one use case of many, right? But we need to be specific, so we need to focus on some use cases, and we do have already one charity platform that's partnered with us, which is Cherio. So that's why we took this case. So all we want to do is prove on the blockchain that you did the charity, right? We want to prove that you actually did that action. So all we do is waiting for the action to be finalized on the charity donation platform. And as soon as it's finalized, we will allow you to mint a social accreditation token. We call them that, right? It's an NFT, it's a soulbound token. And you finalize this activity, and the soulbound token will be minted into your wallet. And you collect those tokens, and they are the base for our computation of your reputation score. And this is just one example of one reputable action, right, that we take, because everyone understands, okay, making a donation is kind of a good thing. But there are much more use cases we can implement here. Also, just as I said earlier, the compound case that we're actually building right now, it's a different way of building reputation, right? So as soon as the ecosystem grows, there are going to be more use cases as well. Does that answer the question?
Yeah. Yes. Thank you.
Okay.
So this solution is actually very much garnered towards a very crypto native crowd, right? So how would you foster adoption for, let's say, users that are new to crypto?
Right. Well, that's the cool thing, because that's actually our main goal. We started this with the intention, besides making the internet a more trustworthy space or place, also to build a bridge between Web 2 and Web 3. Because if you have a use case, you're going to use it. The user doesn't care what's behind it. It doesn't care if it's HTML or a blockchain or whatever the code is. So the use case can be on Web 2 platforms. Like the charity donation platform can also be a Web 2 platform. So we can actually acquire users from Web 2 platforms that just use the DSID infrastructure to accredit reputation to the users, right? Of course, our go-to-market is going to be towards Web 3 users, because they're more likely to understand how to use a wallet, right? But down the road, also when wallet adoption increases and everything, it's going to be much easier also to acquire users from Web 2 platforms. It mainly depends as well with whom we're going to partner, and we have some interesting partners in our pipeline. And if there are some Web 2 business in there and they have a big user base, we can get all of those users as DSID users as well, right?
All right, that'll be all the time we have. Let's bring on Team Spirit Labs. Thank you so much, Team Digital Social ID, for that. Yeah.
Hi, everyone. I will share my screen just a second, please. I'm Alexandra, by the way, and could you please confirm that you can properly see my screen?
Yeah, we can.
Okay, that's great. So I'll switch on the timer. I'm Alexandra, and I'm the founder of Thrilled Labs. I'm Dutch, but I'm based in Italy. And what we seek to do with Thrilled Labs is that we want to enable Web3 projects, VCs and angels, to scope out one another, to instantly talk funding, business, and partnerships. So why is that? Based upon my experience working as a business development strategist in a Web3 infrastructure company, I know that we all want to become the next unicorn, and investors, of course, want to find the next unicorn, right? But finding business opportunity in Web3 today is costly and inefficient. And what do I mean with that? Imagine Matt here on your left. Matt is a VC analyst, and he receives hundreds of pitch decks per week, resulting in overload. And let's be honest, countless meetings to filter out the crap. Paradoxically enough, though, he is also very much reliant on warm introductions from colleagues. The same really goes for Julia. She cannot ever possibly oversee the whole Web3 market in terms of what is being built and who is building it, despite on every action that she's trying to do here. And potentially most grave on your right side is Josh, really. Instead of building, Josh, who is a founder of a Web3 project, and his small team spend hours a day online, looking and meeting with investors, looking for Web3 projects to partner with, but ultimately they often end up with intermediaries, and all the time that they spend online, every minute, every second that they're online, they're not building. That not only impacts their burn rate, but fundamentally it also impacts their competitive advantage on the global ecosystem of Web3. So what is the solution? It's very simple. I'm building a Web2 app that enables projects and VCs and angels to scope out one another to talk funding, business, and partnerships instantly. Now, basically, think a little bit about Tinder, but instead of love, we want to create Web3 business synergies, right? So you create a simple profile. You set your criteria, who you are, who you're looking for, and mostly what you're not looking for. And based upon all that, the algorithm provides you with potential matches, right? It filters it for you. You go through the profiles by swiping, and if you like someone and that person likes you back, you talk, and you talk funding, partnerships, B2B opportunities, whatever it is that you're after. And the great thing is that you don't have to marry one another, right? No, of course not. You just take it from there and see where it goes. Another unique thing, I think, is when you're visiting a Web3 conference, or you are in a new city, or even, I don't know, if you are on holiday in a tropical island, you can also use a special feature that lets you share your location. And with all the other users who are doing the same, you basically find out who is near to you in real time that is also into Web3. And in that regard, you can always meet like-minded people. So why now? Well, I would like to reiterate that we don't only seek to strengthen investment pipelines for VCs, but we also ultimately want to enable Web3 projects to find new strategic and clever partnerships by connecting with one another. And the same really goes for Web3 B2B opportunities, right? The sector is growing like crazy, and many companies, as you know, are actually B2B, even in Web3, and we also allow you to meet them. As I said, we seek to be an enabling technology for Web3, right? Not boosting only its very growth, but also the development globally of everyone who gets involved. What do I mean with that? Well, the app will be fundamentally open for everyone. So all the projects, wherever you're based, you can use the app for free, and the market will sort out the best. That is true capitalism, in my opinion. Of course, we will seek to have global reach, but you can at the same time filter, right, for specific wants or needs. Are you looking for a female founder who is into ESG and who is based in Peru? Just to give an example, you can name it and we find it for you through all the people that are using the app. We also allow, through a simple but clever integration with one of our partners, for crypto payments without off-ramping, because of course we have revenue streams, but then users can actually pay with crypto, which resonates with Web3. In terms of our growth model, of course, we focus on projects and investors early on, but later on, we will also look at other types of stakeholders that are fundamental for the growth of the sector. For instance, conferences as users of the app, but also people like advisors. And later on, we will also onboard other types of entities. Imagine Web2 companies that are seeking to enter Web3, but don't know the right people, but also other types of startups that are slowly converging with decentralization. Here's the revenue model. Just two things to say. We will have primary revenue streams based on a subscription model, and secondary revenue streams, the usual suspects, right? About me, I have a multidisciplinary academic background. I'm a lawyer, I'm a political scientist. I hold a master's in digital technologies. I'm ex-Radom Network, which is a great Web3 project. I'm an entrepreneur in the hospitality sector though, because I always had to work while studying, and I'm an author and a speaker, as you can sometimes, you might have seen me spamming LinkedIn and other sorts of mediums. So that's it. In my opinion, opportunity, certainly in Web3, is a terrible thing to waste. So join us and be thrilled instead. Happy to answer your questions, and thank you for listening. Okay.
Thanks so much for that. We'll move into the Q&A session now.
Alexander, first question from me. How do you want to solve the chicken egg problem of the platform? Because it's a two-sided market, maybe a 2.5-sided market. How you want to solve this?
Well, to be really honest, I don't see it as a chicken egg problem. I think just because we focus very much on the partnerships between Web3 companies, some of the jury members might know, being an ex-partnership kind of guy, that partnerships are so important. So if you can find one another there, including also for B2B opportunities that our Web3 projects also often after, we already have one-sided of the market there. And in fact, there's also quite, I would say, traction coming from investors, both VCs and angels. In fact, we already have 80 people on our waitlist and MVP who I'm actively matching with one another. So there seems to be a little bit of traction in that regard as well, so far.
Thank you.
Thank you.
Hey, Alexandra, thank you for the pitch. Just in comparison to, Web2, Tinder for founders and investors, where do you see the value accrue in what you're building?
Yeah, unfortunately, I couldn't introduce a slide on the competitive, analysis. I think the fundamental thing here is that we're focusing on the whole ecosystem of Web3. As I said, not only on the funder founding dimension, which most other platforms are looking at, but also on the partnerships and the B2B deals. Apart from that, people can also instantly chat with one another. They don't have to upload amounts of data. They have full agency over their profiles, what they're submitting in terms of data. And of course, we're free as well, fundamentally, unless you decide to opt in for the paid versions. And as I said, I think what is important too is that we really have the Web3 focus. We will speak the language of Web3. We're very well connected with the Web3 community. And we seek to be Web 2.5, really. And that is potentially an advantage as well.
Okay, thank you.
Thank you.
All right, that'll be all for the Q&A section for Thrill Labs. We will now move on to the seventh team to pitch, Chenkster.
Yes, just give me a sec. You can see the screen, guys?
Yes.
Yep.
Yes.
Oh, okay, fantastic. So, ciao everybody. My name is Nicola, and together with Giuseppe, we are presenting you today Chenkster, traveling without doubts. So, which problem we are actually solving? So, think even about yourself, dear audience. Actually, when you travel today, are you also start to research the best things to do, let's say in London, Munich, Paris, or somewhere on Google, and you actually receive thousands of outdated results within the Web 2, but don't really know where to start? And just think a second, how many time actually you're spending on researching each of these websites, blogs, Instagram profiles, watching maybe YouTube videos, having outdated reviews, fake reviews, and so on and so far. We validated this problem also with many surveys and feedbacks. We got more than 450 people, and it's confirmed that too much time is really spent and there is no preference match coming to it. That's the reason why we at Chenkster, we have a vision to solve actually the customer's problem, to make travel easier for every single young traveler in the world by, first of all, to reduce the researching time, one of the most valuable things in our lives, and second, to provide the top qualitative information straight away. How are we going to do this? So the solution is the following. So Chenkster is actually a platform where we provide exactly this information. And a Chenkster itself is a local expert or a pro traveler who is providing and sharing their content. And the new thing here and the amazing fact is they're monetizing this. And thanks to blockchain technology, there is ensured that there's a true ownership and transparency of this best advice. On the other hand, on our two-side market is actually then our user. So how does it work? Very, very simple. Just think about yourself. In the future, you will use our app to select your city, let's say Munich or London, choose your category. I would like a hidden gem. I would like to have a nice steak. And then you receive the best advice straightforward with 3 results. If you don't like them, you just reshuffle and you get another advice validated by our Chenksters. If you want something more particular, it's here the 4th screen. We are going to connect you also directly with our Chenksters who will provide you information if you need, let's say, a particular playground to play with your kids in a city you don't know. In the future, to really join a more immersive experience, we are planning also, we will create a metaverse experience to have, let's say, more details about it. So heading over to Pepe.
Thank you very much, Nico. So our solution is oriented towards young and passionate travelers, in particular millennials and Gen Z, that are located all over the world. So we're going to reach and convert this target audience by leveraging partnership with influencers, also targeted ads and strong rewarding systems in order to generate virality thanks to the word of mouth. On the right side, you can also see that the travel industry market has got great growth potential, as it's also forecasted to reach the value of $2 trillion by 2028. We're targeting a $500 billion market, and we plan to reach a $2 billion share in the coming years. As you can see, in terms of business model, we have identified a few different revenue streams. The first one will be the preference match chat. So imagine, for example, you're going to Barcelona and you like to get some very specific and fast information. In that case, for a small charge, you will be connected with one of our Chenksters to solve all your doubts. Now, let's say also you want to get some well-rounded itinerary for that same trip. In that case, you will be able to purchase that directly from a Chenkster in form of NFT that will guarantee you the true ownership of the asset. That will be then possible to exchange directly in our marketplace, creating a secondary market and stimulating creator economy. What if you're instead, for example, a top quality restaurant, or you're offering some fantastic travel experience? In that case, you will also be able to advertise your offer in front of the right people at the perfect moment. So also you can see on the left, we are also going to leverage blockchain technology to create our own utility token that will fuel the revenue stream while creating also strong internal economy and high engagement. In less than 3 months, we've already got to 110 signups and 43 Chenksters applications, 5 of which are already actively contributing to building our platform. Moreover, we've also reached a community of more than 1,000 people, all organically across all our social medias. We have 15 plus new conversations with travelers every single week and 18 investors already interested in the solution. The team in particular is composed by Nico, that you already met. He is a very good leader with an MBA focus on entrepreneurship and more than a decade of experience in the banking sector for a large global bank. He's been also leading different departments and several IT projects in the last 8 years, and is currently traveling the world. Then myself, I've already founded one company in the past, and I have more than 5 years of experience in marketing and sales. Additionally, I have 2 ongoing master degrees, one of which is focused on innovative startups and the other one on Web3. A very important point to mention is that you can see that we are both very passionate travelers, as we visited together more than 50 different countries. Finally, we have also shortlisted 3 strong candidates for the CTO position that we're going to fill very soon. So to finalize, we want to thank you very much for your attention. And we're also sure that the next time you're going to look for travel information, you will notice how much time you're spending on that. So if you want to try and avoid this, make sure to join us on our journey through your favorite social or our website. Thank you very much.
Thanks for that, Team Chenkster. We'll bring on the judges now for the Q&A.
Nico, Pepper, thank you for the pitch. Maybe just a lazy question from my side, but why do you need Web3 to do this? Because I could see this, the conceptually I like it, but I could see it working just as well also in a centralized and generally closed ecosystem. What do you think to that?
Yes, so it's a good question. So we are targeting actually 2 topics on this. So first of all, the front end, I mean, will be kind of unchanged. You saw also the screenshots. It's actually a kind of Web2 looking. So the front end is not important. The back end, we want to have it actually decentralized, because if you compare it with what's today ongoing with centralized servers like Google Maps, TripAdvisor, you don't really owning the data. So this is one topic. Second, there is no really ownership of the content. So if I upload today something into the Web2, okay, it's not really mine. I'm paying huge fees to an Airbnb, to our Google Maps, or what, not even paying nothing. So I'm not getting anything. And that's the reason why we are saying with the Web3 solution and the smart contracts, a peer-to-peer exchange, we can allow in the future really these content creators to get what they're deserving. So this is, let's say, a very important topic. Or if they reshare, so they update, let's say next week, their itinerary, okay, on their itinerary. So instead of giving it for free, they would like to be sure that they're getting their percentage and nobody else, let's say in the system, is reusing their intellectual know-how. So therefore the backend is a strong focus on Web3. Instead, the front end we will keep as of today partially Web2, okay, because the travel industry is not fully ready to swap completely to the world of Web3. And then step by step, we're gonna merge those.
And with respect to the storage of this data, are you building the decentralized storage solution by yourself, or are you partnering with any of the existing solutions out there?
So this is like a make or buy decision we are just figuring out. So this is what we're discussing with these three candidates we have strongly. So full stake, also blockchain developers, to say, okay, guys, what does it mean? So we need, that's the reason you saw that the CTO, we would like to have a clear advice of the CTO telling us, okay, make or buy. So we are aware about the existing solution and we need to see if we want to do it by ourselves. And if yes, how much time, how much cost does it take us? And the go-to-market topic, yeah.
We have time for one more question.
Yeah, I have one more question actually. I like the idea of the integrating the payments aspect. I think it's a huge topic. So I was wondering kind of how would you incentivize these creators to put out more and more content? Like I saw when you were presenting, there were two use cases. Maybe you could embed tipping or maybe even pay them for a consulting session or something like this. But what are your thoughts on it?
Yeah, maybe I will start the first part, Giuseppe, then I will hand over to you. So the first, Pascal, is like we're incentivizing them because they're not getting paid today at all. So as you saw, we speak to 15 different, so digital nomads, content creators, and so on. They're like massive out there. And we're incentivizing them personally. Okay, guys, you're sharing anyway today, so you're not getting anything. So we are creating a modeling like, let's say, I will use the word gamification onboarding. Okay, so first you provide your content in a first level as a first step. In a second step, okay, we are allowing you to use our product. So to be connected to somebody, let's say Pascal wants to have a particular discussion about Warsaw or something. So we are telling them, look, guys, we are offering you the platform where you're getting connected to right people and you can start to make money. So this is, let's say, the new topic where we start to get the money referral saying, okay, you can onboard new Chenksters. So Pascal knows Danny and Axel, you convince them, onboard them. So you're creating really your network. And in this mass market, this is like a massive effect, what we're already realizing right now. I don't know, Pepe, if you want to add something on this, please.
Yeah, I mean, let's say if to make it very, very simple in comparison to to something that we all know, let's think about local guides on Google. They have different levels compared to what they actually do on Google Maps in particular. So that's something similar what we want to do. But the difference is that people are gonna, for example, earn more as soon as they grow with the level. So as soon as they contribute more to the community, they're gonna get more money, they're gonna get rewarded more.
All right, we'll just wrap it up.
Thank
you, Team Chenkster. So we'll wrap it up and we'll have Team Particula on to finish off the pictures.
Thank you very much for the patience with us. So, does everybody hear me?
Yep.
Great. Okay, then let's go. Yeah, like I already said, a very warm welcome from snowy Munich. My name is Nadine and we are Particula, the Bloomberg for ESG token. So with Particula, we are building the first data platform for tokenized sustainable assets and ecosystem-based tokens. And with that, we are offering a trusted one-stop solution for investors, but also for companies. The classical ESG market today is non-transparent, partly unregulated, and non-standardized. That is the reason why each provider has established its own methodologies, ratings, and also scorings. And as a result, investors have to access different database providers at the same time, and this is super expensive and also time consuming. While the trust issues are the reason why more and more projects move to the blockchain, we really have to be careful that we are not transferring the problems of the classical ESG data market to the token market. And this is where we Particula come in with our idea. Our data platform will include all tokenized sustainable assets, for instance, tokenized forests or project funding, token like solar farms, and ecosystem-based tokens like CO2 tokens, hydrogen tokens, or biogas tokens. Therefore, we initially developed a standardized method to collect and categorize CO2 token data in over 100 dimensions and in the 11 categories you can see on the right side. Yeah, this gives companies and investors a transparent way to get a market overview and to choose the best possible project for their needs. But how does it exactly work? Well, of course, we are building a data aggregation and comparison tool. And as you can also see, we have two different portals, or you can also say terminals. And on the token issuer side, so the token issuer on their issuer portal, they can actually register their profile and provide all the necessary data. And also what is in for them, through our platform, they can get visibility, attract new clients, and they're also able to challenge themselves with their peers. And on the right side, the client portal actually. So there, the client, they can do whatever they can do also in a classical ESG database. So they can search for information, they can compare tokens, they can get scorings, filter and download reports, and also download analysis. And while we are not aiming to be a marketplace, we are nevertheless a place where demand and supply comes together. But why is the right but why is now the right time to create such a database? Well, we are at the intersection of three of the fastest growing markets of our time. So the market for tokenized assets, for instance, the market for sustainable investments, and the voluntary carbon market. And at the same time, companies face an increasing regulatory pressure at the EU level, which lead to an extensive need of ESG data. And that is the reason why the market for ESG data will grow by a factor of 4 in the next 2 years alone. At the same time, the market is highly concentrated, so only 7 providers share 80% of the market. And as I have mentioned earlier, companies and investors employ multiple vendors at the same time. As our database is the first to provide information about tokenized ESG assets, we believe that we complement rather than compete with other providers. And that's why we believe also that we can capture a high market share value in the long run. This is also shown in this competitive landscape. So we researched the market on the classical side and also on the Web3 side. And we also divided it in ESG data provider and in ESG marketplaces. And as you can see, we have a sweet spot there because no one is doing the data aggregation on the token side yet. Yeah, and our team, so we are in a total of 3 co-founders right now, and we have a lot of experiences in different areas, which makes us, in our opinion, the perfect founder team. Wolfram, for instance, has over 20 years of experience in the software industry. Tim has his expertise in regard to regulation, digital assets, and finance. And my expertise lays especially in product strategy and development. And I'm also the one who got really into sustainability in the last years. Yeah, and we're also onboarding a CTO right now, and he's helping us with developing a demo and also the product in the end. Yeah, now thank you very much for listening our presentation. You can scan this QR code, join also our demo waiting list. We have right now 60 B2B contacts already joined us, and yeah, we are really excited to answer all of your questions. Oh, and the demo release will be in Q1 next year, so stay tuned. Thank you.
Thanks very much for that. We will have just one question in the interest of time, and then we will have Zhongchan on to wrap up the entire demo day session. Thanks so much. I understand we are running over. We'll just be ending soon in about 5 minutes time.
All right. Thank you, Melissa.
Hey, Nadine, I'll jump in. Thank you for the pitch. I'm just a bit struggling in terms of how solution lines up against problem. Can you go deep for us on, the biggest problems in this space that you're solving?
I will give to Tim so that you can also hear my co-founder as well today. Tim, would you like to answer?
Yeah, for sure, Hugh. Thank you very much. Very interesting question. I think the most pressing problem in this market, in the classical ESG data market, is that there are no standardizations. There is no wording which fits on every project, and you do not know which project is good and which project is bad, because no project is similar to the other. And currently there is a market building from scratch in the blockchain space for project financing, for ecosystem-based token, eco-service token, and we have the opportunity to build these standards and so prevent the mistakes which were made in the classical market from day one. And this also gives the opportunity to build something like a one-stop solution, which aren't or isn't available in the classical market. So in Europe alone, you have over 60 ESG data aggregator databases, which provide their own ratings and scorings. And therefore, it's highly expensive to get access to different databases, do your own research, aggregate the data. And if you have a portal or a tool which includes all tokens and you can search by your interests and by the needs you have, and have something like a one-stop solution, it's definitely a value add which firms are looking for. We spoke, for example, to big firms like Sixt. It's one of the biggest car sharing companies in Germany, and they're currently definitely in search for something like that. And we also see institutionals like BFG Capital, which currently built something like a impact investing fund, which they not only emit in a classical way, but also tokenized. And they're currently on search for something like a database where they can choose their CO2 token provider because they want to offset the emissions which are made in the emission with CO2 token. And that's the point where we come into play.
Thanks, Tim.
You're welcome. Thank you very much.
All right, thank you, everybody. So now we will have Zhongchan on, and that will be the end of the Q&A session for Particula, and also the wrap of all the pitches for our demo day. Thank you, everybody, for coming on. Zhongchan, you can just wrap up the session.
Yeah, sure. Can you share your screen, Melissa?
Yeah, sure.
All right, while we compute the judges' scores, this will take me a few minutes. I will talk maybe a little bit about the BFG Superstars program, because this is where all the teams, all the great startup ideas have been coming from, right? So why we have brought the BFG Superstars Startup Incubation Program to life is because we are taking a huge bet on Web3, because vis-a-vis the old centralized Web2, we believe that it brings certain advantages such as anonymity, openness, but also privacy, right? So we believe that this leaves a huge opportunity open for new business models that run on decentralized networks. And yeah, so I will give you the deal here. So we finance every startup we build within our program with up to 60K euro in exchange for equity. And also during the program, every startup member will receive a monthly compensation of 2,000 euro flat. So you can use this to pay your rent, buy software you might want to use to scale your startup. So really anything that you need to really kickstart your venture. We are offering the BFG Superstars Incubation Program twice per year. The first cohort starts always in March and goes to June. And the second cohort for every year starts in September, and the final pitches are around December. And we are now preparing for BFG Superstars Season 3. The application deadline is February 17. So you still have a lot of time to get in touch with the team, with me, with Max, with the BFG core team, also Melissa. And what are the topics we are interested in? It's Web3 very broadly. So under this topics such as crypto management, DeFi, which is a topic that I'm a huge fan of. Also NFTs, DAOs and governance, identity, private tech, Bitcoin Lightning is also super interesting. Also, the intersection between carbon and blockchain technology is something that we are really excited about. But also, of course, GameFi and the metaverse are topics that become increasingly important in this sector. Also, I just want to quickly mention that we are a 100% online and remote program. So you can basically apply from all over the world, be it in South Korea, be it you are in India, or be it in South America. This doesn't really matter, and you can come from different backgrounds. You can be a student who wants to kickstart a startup right after graduation, but you can be also someone coming from the corporate world, trying to make the jump from Web 2 to Web 3 as well. Yeah, with this being said, we will also host in the coming weeks some AMAs. So this will give you the opportunity to really ask us all the questions that you have about the program. I'm sure you want to also discuss what ideas we are bullish on. We can all answer these questions in the coming weeks through the AMAs. And if you make sure to follow us on social media, such as on Twitter, on LinkedIn, or Medium, you will be sure to be notified. All right, with this being said, let me click on the next slide. And Melissa, drumstick, let's make it a bit more exciting. I need some tension here.
Come on, everybody.
Yeah, I'm very happy to announce the top 2 teams of today's BFG Superstars Demo Day Season 2. And these are, on the first place, MeCash, and on the second place, Realindex. Congratulations, Modupe and Dimitrios. Great job pitching. But I also want to just quickly mention that 3rd, 4th, and 5th place have been actually very close. There was only a 1-point difference between the 2nd and 3rd place, and only 2 points between 4th and 5th actually to the 2nd place as well. So it was really, really close. So great job. Shout out to all the teams. It was a pleasure for me to work with you for the last 3 months. And yeah, we definitely stay in touch. And with this being said, let me show the last slide, which is final notes. So we are organizing monthly Web3 startup pitches. So this is where we invite our own startups from our incubation program, but also external startups in the early stages in the Web3 sector. We do this monthly with external judges. So make sure to follow us. And here, if you scan the QR code on the left, you can register directly to the startup pitch event in January next year. Also on the right side, if you're still around, make sure to submit the post-event survey. It just takes a couple of minutes, I think 2 minutes at maximum. This will help us improve our pitching events. And yeah, thanks a lot, judges, and especially startup teams, for all the great work and for your time and attention. And yeah, I think it was a great event. It was a lot of fun hosting this, and see you